Joining me to discuss all this, Stephanie Roth, Chief Economist at Wolfe Research, James Pethokoukis, Economic Policy Analyst at AEI, and CNBC Senior Economics Reporter Steve Leisman. A very good afternoon to you all. Steve, I'm going to start with you. Is it possible to fire the Fed chair? Is it totally impossible, or are there odd ways around it that the president could do if he so desired?
Well, the chair can be fired by the president for cause, which is generally thought to be incompetence at the job or some malfeasance that they might commit. The idea of disagreeing with the chair's monetary policy, which, by the way, is not just the chair's, it's the whole Federal Open Market Committee, that would, most people believe, not be sufficient cause to dismiss the chair.
Jimmy, what's your take on that? Is it something that is plausible if he so desired to do it?
I think it could become more plausible, depending on the Supreme Court, which is going to be looking at the ability of the president to sort of fire people who are running independent agencies. Right now, I think Steve, the way he described it is correct, that normally you would not think you were able to fire the Fed chairman. But it sounds like that's what Trump currently believes, that he can't do it. That's what Bessent's telling him. So then what is the purpose of a social media posting which will, A, only add unneeded uncertainty in the markets? I mean, what is the point of that unless you're trying to pin a potential recession on Powell so they get the blame rather than you? But I think by doing that and creating more uncertainty, you may actually be bringing about the outcome that you fear.
Well, I bet the blame game is part of it. Stephanie, do you think the tweet itself is something that will influence Powell and other Fed members?
No, I don't. I don't believe that they're going to be influenced by him. I think they're going to stick to what they do best, which is follow the data. They're going to be data dependent, perhaps a little bit late to some extent in the sense that they have to wait for data to get bad before they can react. And I think that was the market's reaction yesterday after Powell's speech, is that they're going to have to wait to see the unemployment rate rise more materially in order to cut rates. They're not going to get ahead of this. They're not going to cut in advance. They're going to have to watch to see if unemployment rate really becomes an issue, especially given the inflation side of the backdrop as well.
So sum up, Stephanie, where your forecasts are after that speech yesterday for the rest of this year in terms of rate cuts.
We're looking for 2 cuts towards the back half of this year. The market is looking for a little bit more than 3. Our base case is just that it's going to take a lot longer for the Fed to be able to actually step in terms of easing, and the market is just a little bit more optimistic than we are in terms of when the Fed can do that. So base case is probably more like September of this year at the earliest.
Steve, I want to get you to expand on something that you mentioned briefly with Scott last hour, which was that if we get trade deals, rate cuts become more likely. I'd almost think it would be the other way around. It might support the economy and make less need for one. So just talk us through your thinking on that.
Well, it depends on, let me separate that. There's 2 things going on here, Wolf, which is one is the process and one is the policy. What I think Powell, and by the way, several other members of the Fed are saying, is we can't figure out what the outcome is going to be, in part because the policy at this point is uncertain. And I think every single investor, no matter how much money they have in the market, would agree that the policy has been a little, shall we say, chaotic or cacophonous or any other word you might want to come up with that would fit there. And so that makes it very difficult to take a number and plug it into your model and come up with something. I would say that's a prerequisite, these deals, for figuring out what the ultimate economic impact is going to be. Note that a big part of what Powell has said is that the tariffs are larger than we expected, and so the economic effects will be larger than we expected. It tells you that they have to go back with some of their assumptions. As, by the way, well, so did the market. The market was already down in anticipation of the April 2nd announcement. It took another leg down because it was pricing in worse outcomes from that. So now there's a game going on. What is the deal with China? What's the deal with Japan? What's the deal with the EU? Those are probably the 3 most significant ones, along with Canada and Mexico, and then we can figure it out. So I just don't think the Fed will feel like it has the all clear to begin thinking about what the right level of interest rates is once they, until they have some of these major deals in place.